Topic 1. Fed held rates steady, paused its rate hikes amid a divided Fed and ongoing inflation concerns, keeping borrowing costs elevated and signaling data-dependent policy. Summary, 3 to 4 lines. The Federal Reserve kept the federal funds rate at 3.50 to 3.75% in a 9-3 vote, marking the fifth consecutive pause and the second meeting under Chair Kevin Warsh. 3 regional Fed presidents voted for a 25 basis point hike, revealing division within the committee. The Fed emphasized a 2% inflation goal and a shift toward data-dependent decisions rather than traditional forward guidance, while markets reacted with higher long-term yields and equity weakness. Detailed points. The Fed kept the federal funds rate at 3.75%, 9-3 vote. This was the fifth straight pause and the second meeting under new Chair Kevin Warsh. In the vote, 3 regional Fed presidents, Cleveland, Beth Hammack, Minneapolis, Neil Kashkari, and Dallas, Lori Logan, cast dissenting votes for a 25 basis point increase, exposing division, 9-3. Chair Kevin Warsh reiterated that the inflation target is a single 2% goal and reaffirmed no soft target. He signaled a reduction in traditional forward guidance and emphasized a data-dependent policy approach going forward. Core PCE and other inflation indicators remain above target, for example, core PCE at an annualized 3.3%, with supply shocks from energy and tariffs highlighted as important upward pressures on inflation. Market and financial conditions reacted. Long-term yields surged, the 30-year jumped toward about 5.2%, approaching 2007 levels. The 10-year rose into the mid-4.6% range, while the 2-year fell slightly. This divergence suggests investors are reassessing the odds of further Fed tightening. Financial markets weakened. Equities slid. S&P 500 fell intraday by about 1.5%, and futures and derivatives repriced the probability of a September rate hike to the 50% plus range, roughly 57 to 63% across various indicators. Market participants and experts are split. Some, like Jeffrey Gundlach, argue additional hikes are needed to reach 2% of inflation. Others contend rate policy has limited effect on supply-driven inflation and urge caution. Key near-term watch points are upcoming inflation releases, June PCE, preliminary GDP, and the September FOMC meeting. Chair Warsh is expected to clarify communication and policy direction at events such as his Jackson Hole speech and via the Fed's task force outputs. One-line core takeaway. The Fed paused rates amid internal disagreement and signaled a data-dependent approach, but persistent inflation and market reactions keep the possibility of further hikes alive. Topic 2. Big Tech and AI Volatility. Meta's Reality Labs posted a $4.6 billion loss. Meta's stock plunged 10% amid heavy AI spending, while Microsoft rallied and Microsoft topped expectations with $90 in revenue. Microsoft touts AI cash flow. Summary, 3 to 4 lines. Meta's Reality Labs reported a large operating loss and heavy AI infrastructure spending, sending Meta shares down around 9 to 10%. Microsoft beat expectations with roughly $90 billion in revenue, strong Azure growth, and claims that AI investment is translating into cash flow, boosting its stock. The contrast underscores how heavy AI investments create short-term cash flow pressure and stock volatility, with investors split on which companies will convert AI spending into durable revenue. Detailed points. Meta. Reality Labs posted an operating loss in Q2 of $4.62 billion and revenue of $431 million for the unit. Since late 2020, Reality Labs' cumulative operating losses have exceeded $80 billion. For the company overall, free cash flow in Q2 plunged 91% year-over-year to $784 million, and total quarterly revenue was $60.8 billion, up 28% year-over-year. Meta projects AI infrastructure spending could reach up to $145 billion this year, expanding data centers and compute capacity substantially. After the results, the stock fell roughly 9 to 10%. Management mentioned the possibility of Lee